Hello and welcome to the Wendell Effect. My name is Brandon Wendell, Chartered Market Technician, and I'm going to guide you through my view on multiple markets today. So welcome back, everybody. We'll go ahead and get this started by minimizing me and jumping right into the Wendell Effect. Just to remind you, we are not registered broker-dealers or investor advisors. I'm telling you all this information from an educational standpoint, not telling you to buy or hold in particular securities. And there's always risk involved in the market. You should never put any money at risk that you can't afford to lose. And we're not subject to trade restrictions, so we can have a position of security in it or initiate one at any time. So that being said, you can stay in touch with me. I'd love to hear from you at the Wendell Effect at tradingmindsetassociation.com via email. You can catch me at Twitter at TraderBdub or search for me on the Wendell Effect on YouTube. And for today, we're going to do our usual analysis of the overall equity index futures for what's going on this week. Then we're going to jump into the energy futures, look at sector analysis, Indian markets, and then a little bit of Bitcoin as well to throw in there for good measure. So we'll jump into it right away with the equity index futures for the week of July 25th. So, whoops, camera's getting a little fuzzy there. I'm not sure what happened, but we'll figure that out. Anyway, there it is. Just need to refocus, I guess. All right, so doesn't matter. As long as you can see the charts, that's the main thing anyway. My dog is jumping up on my leg here, trying to get up here. So anyway, looking at the ES on the weekly chart, you can see that we've had a little bit of a rally off the lows. We had a positive divergence, but really we haven't gone very far. And it doesn't look like we're going to be honest with you. I don't think the weekly trend is going to change. We've just got a little bit of bullish activity pushing up. Going into the daily chart, you can see that we had failure to make a high above 60 on the RSI. So even though things have become more bullish, they're not bullish enough to break through any serious supply zones. As a matter of fact, looking this week so far on Monday, you can see we've come into a 4-hour supply zone on the S&P. And we've been reacting to that by pushing downwards very, very sharply. We don't have a confirmation of a trend reversal, but we are retracing. I'll be keeping an eye on 38.59.75 for a possible demand zone, to be honest with you. Could get down to that level. Let me see if, do I have my chart open still? Looking at some other charts as well as trading. But yeah, if you take a look at the ES, go there, ESU 2022, and that 4-hour time frame, you can see we went off of that 4-hour supply and are just seeing weakness today. So that's what I was expecting, kind of a push to the downside, but not too far. Overall, I think this week is going to end up relatively flat, just slightly bearish. Looking at the weekly of the Nasdaq, it's a little more bullish. You can see we had a pretty deep retracement off this last impulse down, much higher than on the other equity markets. But still not bullish enough, although we did move into a daily supply this week, or last week actually, a Friday going into this week. You can see we started pushing back down from that daily supply. Let me jump over to the Nasdaq and take a look at that again. And again, on the daily time frame, you can see, I zoom in there, the daily supply is still pushing down today. As a matter of fact, we retraced about 50% of our previous impulse to the upside. So if I go down to the 4-hour time frame, you can see that this is getting weaker and weaker and trying to push us down. Now, we need to break 40 in order to be able to go much lower. Other than that, we might just start to flatten at this point at about 12,277. I don't see us going much higher by the end of the week, though, because, again, we're in the doldrums of the summer. We're likely to just drift back and forth. So, again, on the 4-hour time frame, you can already see what has happened. There was hidden divergence that caused us to pop up, and then now we're just on a retracement back, and we're still stuck right around that 50% retracement level. So don't expect much out of this market for the week. I expect we're going to be kind of choppy and sideways. Good for day trading, not so good for swing trading. Looking at the Dow, it's not as strong as the Nasdaq. You can see that retracement barely went 50% of our previous impulse down. And on the Dow, we're chugging along, but not getting to the daily supply like we did on the Nasdaq. It's only gotten to the 4-hour supply like we did on the S&P. And just like the S&P, it's reacting negatively to the 4-hour supply. Not a surprise. We lost all of our momentum. So I wasn't surprised this morning to see the markets push to the downside, back down, probably going to test that 31,203 before the end of the week, and then most likely bounce off that just a little bit. By Thursday and Friday, we'll get a little bit of a relief rally, but it'll overall end the week pretty flat, maybe a little down. Same thing with the Russell. You can see the Russell tried pulling back. It's trying to make it higher, but getting weakness today as well. On the daily chart, Sunday going into Monday, we pulled back a little bit and couldn't even get to the 4-hour supply. So we ended up seeing a divergence before that and a lot more weakness now. Let me take a look to see where the Russell is currently. On the 4-hour time frame, yeah, you can see that we ended up hitting that 4-hour supply zone, right? We stalled shy of it, just shy of it. And you can see that we're just seeing weakness here. So we're drifting a bit sideways, not really diving by any means, but again, there's a lack of momentum in either direction, lack of volume. Welcome to summer. That's the way it goes typically. So moving on to the energy markets for the week of the 25th, we'll start off looking at the energy market known as crude oil, and we bounced above the weekly demand zone, tried to pick our footing up and move up, but we're not really getting a lot of momentum either direction. You take a look at the 4-hour time frame, we had a positive divergence, and the big test will be Tuesday. Okay, so this is on Monday right now, and you see that we've put in a low that's not below 40. We need to see if we can finish with that bottom wick, and then the next day, if we make a new high and a higher low, then that will confirm a reversal. So if we go out to crude oil here, September contract, again, going into the daily chart, it's looking pretty similar to what it left it. You can see right there, we've got that low being put in, not below 40 on the RSI. If we can on Tuesday make a higher low, higher high, then we're likely to go up and retest maybe 106.79 area. If not, then we could break to new lows and retest the demand and even go lower. So going back to my charts here on the 4-hour, you saw we bounced just before the prior lows, but there was some extra weakness there. Not really confident. So again, it all comes down to really Tuesday's price action will dictate the rest of the week and beyond. If we make a higher low and higher high Tuesday, we go up to 106, 107. If we make a new low and break 92.90, then I expect us to go way down, possibly towards 84 before next week. So looking at the historical move, typically we're bullish, but only a little bit during this week. Historically, for the week of 25th through 29th, 60% of the time we're bullish. It's not a really strong week to begin with. Next week, however, that's where things start to drop. So that could get interesting, especially if we can't seem to break out above this week. If we start to see some weakness, then look out below next week. For the natural gas chart on the weekly time frame, we did fail to hit the demand zone, but bounced quite nicely. Never got into bearish territory. We are in bullish territory right now, but we're not nearly as high as we were before with the momentum. It's kind of weird. You would think that with this vertical move, we would have gotten more momentum out of this, but that was done on light volume during the summer. Again, a bit of a suspicious move and unsustainable as well. In the daily chart, we were luckily able to break through supply. As you could see, we got enough momentum to get above 60 that caused price to be able to go up beyond the prior supply zone, but we're going to stall out of this 8.5 area pretty soon. If we reach that area and, well, we've got a lot of momentum, but it's not nearly as high as it once was. That's the problem. We need extra momentum to get through. I think we're going to stumble around there this week. So I'm bullish right now on nat gas for the beginning of the week, looking to see flatline towards the end of the week. You can see that on the 4-hour time frame, still relatively bullish, but not quite as strong as we really need to get through that zone very easily. So it will get through, but it's going to take a little time. We'll probably get a little choppiness on the way up for the rest of the week. According to the historical pattern, really, we put in a V bottom. It looks like we're supposed to be going down a little bit for Monday, Tuesday, and then Wednesday, Thursday, Friday start to rally. Although it's not really that big of a move, we're overall a little under 1% gain for the last 6 out of 10 years for the average. So it's not that great. So don't expect a lot out of the market this week. You could day trade it. I wouldn't be putting in a lot of swing trades overnight. Gasoline did try to push through this demand zone on the weekly chart, but it did not have enough momentum to sustain that. So you see we started pushing back up. Looking at the daily time frame, we failed to get a trend reversal though. We had a positive divergence, but yet we follow with the low that was below 40, not above. So that suggests that this is going to be a short-lived move up before we continue to push lower. Thankfully, if you're trying to fill up your car at the pump, you do want those lower gas prices. But it doesn't look like we're going to get much lower. Here's the weird thing going on the 4-hour time frame. We had an impulse down, retraced 50%. Impulse down, retraced 61.8%. So we had a deeper retracement. That means the moves up are getting stronger. And the very last one that we just had was 78.6% so far. Again, more momentum to the upside. It looks like we're getting ready to go sideways, at least maybe put in a temporary bottom for now in gasoline. Unfortunately, it looks like we're going to get stuck a bit sideways here as well. Looking at the last 10 years, the move 50-50, you pick it. It could go up, it could go down. It doesn't really look like much out of this week. Next week is where we start seeing the bearish pressure, so it's just not there yet. Overall, we're looking like it could be kind of wishy-washy back and forth for this week, and that's exactly what the charts are telling me. Again, great for day trading, not so great for swing trades. Looking at the weekly chart of heating oil, you can see, I'm going to move this a little bit out of the way for the label there, but there is a weakness as we pulled back, and we got weakness again. We've got red and green mixed as we have really no momentum as we came into this weekly demand. Diving down a little bit, we also see that we try to put in some bottoms, but we're still below 40, so there's not enough energy to push us higher to break supply. It could be another weekly move sideways, honestly, in heating oil. And even on the 4-hour chart, we had some weak retracements, and, well, we do have a positive divergence now. Price is making lower lows, but the indicator is making higher lows. That means that we could see a pop to the upside, maybe up to 3.62, possibly retesting the prior high at 3.69, but I don't see much more out of this week. So we'll jump into the stock market, take a look at the hot stocks and hot sectors for this week of the 25th. It's been kind of weird looking at the last month and the way the markets were. We had the performance of the safeties here, where you have consumer staples, healthcare, and utilities that are normally bullish when markets are dropping as people make that flight to safety. However, what's been happening recently in the last week or so, you can even see it in the month, discretionary is going up, technology is going up. That usually happens when people are expecting a market bottom. So this last week, you can see in the last 6 days, they've been buying the stocks that you would normally buy when you expect the market to be putting in a bottom and starting to rally. I think it's a false bottom. I think this is kind of a signal of those people thinking they put in the bottom. And remember, August is not the worst month of the year. September is. So we're kind of waiting. We're kind of in that holding pattern before the markets could really start to dump in the later part of the year, September, October. So right now, yeah, there's a little bit of a flight to safety, but it's not going to be long term. You can even see it in last week's map. The hot sectors, consumer cyclicals, energy was still hot because of inflation, but industrials and materials. Meanwhile, you had a falling out of favor in communication, healthcare, and consumer defensive, as well as utilities. So the three defensive sectors, healthcare, defensive, and utilities, did not perform well. That suggests that people are trying to pick a bottom. I think they're misplaced and they're going to be surprised. It's just not going to happen right away. So continuing on with the sector rotation and movement, you can see the S&P normally just gets choppy this time of year anyway. This is not the sell in May and go away, but still the last kind of summer doldrums where the markets really don't go very far at all. So I don't expect a lot out of this. And you can see the staples didn't really drop. They started to go sideways. As we go forward, this is what we did last week. We actually are seeing a little bit of bullishness at the tail end there as some flight to safety is starting to return as people possibly expect the markets to be either sideways or drifting downward for the next week. So you're starting to see a little bit of a flight to safety coming back in. You saw it on actually this week, coming into the beginning of this week. Healthcare, that was last week. We were retesting a supply zone. This week, you can see we're trying to push through that supply a little more. So again, there's a little more strength coming into those sectors, healthcare and consumer staples, as people realize this may not be the bottom of the market. There might be more to go. They're starting to push it a little bit more into the safe havens again. Utilities, this was drifting downwards and channeling downwards, kind of like a little bull flag. We had the nice rally off the demand zone, started to flag and pull back a little bit. Notice this week, though, we're breaking upwards. So again, we're starting to see maybe a shift back to the safe havens and away from the dynamic risk-on type of play. So keep an eye out for that. Taking a little follow-up, we had Costco as a buy opportunity that I put out at the end of June, and it's been a beauty. She's been going up quite a bit. You can see it's still closer and closer to the target, but we might need to book some profits. We have a negative divergence where prices made a higher high while the indicator made a lower high. That normally leads to a pullback, so be careful. Move the stop up at least to 520, 521, and just keep an eye on it, because if it breaks that trend, it's going to fall pretty quickly. So be careful there on Costco. Don't want to get back to profits. Looking at Edwards Life Sciences, this one also is looking for a move to the upside. And you can see that it's gotten pretty close to the target, but again, stalling out. We lost a lot of momentum. You might need to book the profits or at least move the stop up to 101 just in case we start to fall down, because you don't want to give back everything you've gained on that stock, hopefully. Another follow-up was Discover Financial Services. You saw that we were moving up very well. It actually did hit target number 1 last week and pulled back, hit above the target. Unfortunately, I forgot about earnings. Got to make sure you get out before earnings come out. So hopefully you had a stop in place and got out while you still had a profit, but this gap down quite a bit and hurt you and gave a lot of profits back if you held into those earnings. So just be careful when those earnings are coming out. Get out. There's better plays, usually options of what I'll do there, and it's not really what you think. I actually would sell rather than buy. But anyway, that's another story. We'll talk about that another time. NEE was also an interesting one, originally looking to buy when it hit this demand, but what it did was it pulled back, if you recall, went to the lower demand zone, giving you another opportunity because it was still above 40 to buy, and this would happen after a divergence, so there's warning before that happened. Well, we've gone back up. Unfortunately, as we've gone up to new highs, we're failing to make more momentum, and therefore we might need to book profits before this drops again. Maybe put the stop at about, I don't know, 79.50 just to protect yourself in case if it pulls back a little bit more if you want to try to stay in. But it doesn't look like it's going to reach target, unfortunately. Anyway, looking continually at the sectors, we were a little surprised, or at least I was. I didn't expect to see that rotation into the dynamic sectors, the risk on. So we broke out last week in the discretionary sector, XLY. I don't see that happening long term. I think there's a false breakout because normally when you have those breaks from those triangles, you go in the same direction you entered, which should have been down. So we may go back and retest that breakout area. Just keep an eye out for that this week. Wynn Resorts was a short opportunity, and unfortunately, this one did not work out. It was a great winner 100% of the time for the last 10 years, or 5 years, 5 years it went down. This was the 6th year, and it did not. As you can see, I was looking at it on a down trend line when I went over this last week, and unfortunately, it just busted to the upside and took us out. So, you win some, you lose some. You can't have them all winners. That's why you got to maintain proper risk management. Okay. So, XLC Communications really just broke sideways. Didn't really break up. I mean, it broke that downward trend line, but it wasn't really confirmed. It was just kind of a channel line, and we're just sideways retesting demand again. We're not very bullish. We couldn't get above 60. So if the week goes on and we start to find more selling pressure, we should test that 50-55 demand, the fresh one down below. Netflix was the trade I was looking at for a possible shorting opportunity, but I said you got to be careful because if we go above 60, which we were likely to break above the rest of the demand zone or supply zone that has not been tested, we should get through. And that's exactly what happened. We gapped up, as you can see. We were above 60, so there was no shorting available. It actually used that area as demand and bounced. So no trade there, obviously. OMC was another one, watching. The problem was, normally when you go sideways, you break down. In this case, you could see we started to get a little bit more bullish momentum, very slight there, and we actually broke out to the upside above 60, and that killed the trade. Now, there is another supply zone here you can look at. Kind of drop, base, and drop. So if we come into that area around 72.50 and we have a divergence where we make another high in price, but a lower high on the indicator, then that would be your shorting signal. So keep an eye out for that. XLK also broke up, but all it really did was go right into a supply after it broke out of this pattern. So we made higher lows, higher highs into supply. It did get above 60, so if we pull back, we're not going to make new lows on this move down. We're likely to stall out around 131, 132. Just not seeing a lot of opportunity right here. Industrials looks a lot more bullish, though. Now, you can see we had a positive divergence, which was very strong. Prices tried to make fresh lows. Indicator made higher lows, and prices went with it. So will we make a new high this week? Probably not. We'll stall out maybe in this 92, no, I guess it would be 94 area. But I still see some bullishness here. If the stock market goes up this week, it'll be the industrials and the materials that take us higher. Those would be the two that I watch for. If I take a look at XLI right now, Let's see what it's doing right now. Yep, you can see today the markets are down, but it is somewhat bullish. All right, if you take a look at SPY, we got a red candle today, right? The markets are a bit down, but you take a look at XLI, just like I said, it's holding up much more bullish. So we probably want to look for stocks in that sector. As a matter of fact, I can go out to, let's see, I don't have it on here. My XSplit, which one is it? I just blanked out now. My sector rotation tool that I like to use. I just had it here. Where was it? Here it is. It's Seasonax. Okay, so let me go back to where I was. We were looking at the XLIs and possibly XLB, which is also bullish, as you can see, after a positive divergence. So if I go to Seasonax, oops, there it is. I have to log in real quick. But if we're looking for some good opportunities, we could possibly screen, and let's go back a little bit more in history, make sure we got some consistency here. Last 15 years, we won 85% win rate or better for, let's see, we'll do tomorrow is 26. And I'm going to go into the industrial sector, and there's nothing there. So let me go down to 80. Oh, there's some there. Actually, I can look at smaller time frame too, 5 to 30 days and 80% win rate or better. There we go. So we have L3 Harris Technologies and Old Dominion Freight Line. Old Dominion actually I'm going to be looking at already anyway, but looking here at L3 Harris, you can see that 80% of the time it's gone to the upside for an average return a little under 3%. So if I take a look at LHX on the chart, I don't really have a good entry point. We do have some overhead selling pressure we're coming into. We also have earnings coming up, so I'm not going to touch that one in front of the earnings. Yeah, we could have a big move up or down. Maybe you could do some sort of a straddle, but you got to be careful buying it now because volatility is going to be extremely high this close to the earnings release. So it may not be the best trade right now. All right, well, let's go back over to the other sector, which was the building materials, and see if there's anything there. And actually, I don't have building materials being shown here, so don't have anything on that. So anyway, we can take a look a little bit later to see if there's something else there. As far as, energy, XLE, you can see that also started to pop a little bit at the end of the week, but not very strong. So we're just kind of grinding a little bit and should go a bit sideways on energy. Anyway, Apache was one of the trade ideas I was looking at from the 18th of July until next month, the August 17th target. It normally drops pretty well during that time. It does go up a little bit before it drops. Unfortunately, I don't think we hit our supply yet. Let me take a look. Oh, we did. This one ended up breaking through. It was on the hourly time frame looking to short 32.90. And you can see we ended up gapping into the zone, but with too much momentum, we went above. So that trade did not work out. On the financials, that actually retested the triangle and broke upwards, but it's falling down. It's like kind of rolling over right now. I don't think it's going to sustain that move and should be able to drop this week. As a matter of fact, let's take a look at what XLF is doing right now. Yeah, it's kind of weak. You can still see that weakness there today. So definitely not as weak as the broad market, but not very strong. Travelers was one of the ones I was looking for, a small rally before it dropped. And we're not into the supply zone yet, so there's still opportunity here to potentially short if we do get into that supply at 163. As far as real estate, that also kind of drifted a little bit higher, surprisingly. But again, if the market starts to go sideways, this will go down as well. And one of the picks I did have for this week to the upside is actually Apple, which could hold up the markets. You can see over the last month, this coming month, to 25th of July until about the 21st of August, 90% of the time for the last 10 years, Apple has rallied. So this is a bullish time for Apple, and we have an area of demand on the 4-hour chart. So if we can pull back into 150.21, 146.73, that's an opportunity to buy. Target 1 is at 163.62, but let's not forget the stop. Put that in around 146.30 with your target 2, if we do really well, all the way at 173.08. So we're in with a seasonal window, and you can see lots of momentum to the upside. May not even pull back enough to get you in. I believe on Apple there was also a 60-minute zone that we were nearing. Again, this is my 4-hour time frame. I'll bring it in. There it is, 4-hour drop-based rally. But I think on the 60, I wanted to check that out. there's a little bit of a zone a little higher here, rally base rally, that we can keep an eye out for instead of the 4-hour. It's a possibility. Let's see, what's the high here? I want to make sure I get it accurate. 150.93, the close, 150.97, that's above. So that's the zone. So keep an eye out. Also an eye out if you wanted a little less risk, 150.80, 150.28 with the stop loss at about 150.23. Don't really need to give it a whole lot of breathing room, but that might be another opportunity. Just watch out. If the RSI is below 40, do not go long, because then there's too much bearish momentum. That's what I'm watching for here as well. So, Old Dominion Freight Line, that was the other one I said is very bullish. Remember, 25th of July to 18th of August, it's been going up 90% of the time. This was one of the ones that I showed in the industrial sector that usually goes up. So, looking at that as a trade opportunity, you can see on the daily chart, we got higher lows and higher highs. You know, with one exception there, but we're still making the moves up. Lots of momentum to the upside still. So if we can pull back, I'm looking to buy on the pullback to 263.99, 259.87 with a stop around 259.75, targeting 303. So this is a very bullish potential move to the upside for us. And again, on ODFL, I don't recall. I think, yeah, on the 60-minute, there's also a zone that we're hitting already. So if we don't go down to that demand zone, it's because we ended up holding this demand at the 60-minute. As you can see, we have rally, base, rally. You can see we came into that zone, could not get below 40. Keep an eye out, though. We also have earnings coming out on the 27th. So we want to be out before those earnings come out. Sorry, I got an alert going on another screen here, so I'll get back to that later. Anyway, as far as the Indian markets now, we're going to shift gears and go over across the seas and look at the Nifty. We were pretty bullish last week, but couldn't make a new high. So while we're still bullish, we're struggling to make that high and kind of sandwiching up against that overhead highs. Same thing. You see, we accelerated away from our trend, stalled out at the previous highs. We're still very bullish. So if we pull back, we're not likely to pull back by much. Maybe back to 16,403 before we try to make another run for some new highs and break the trend. Be interesting to see if it continues to be bullish this year or for the end of the year. On the 4-hour chart, same thing. We accelerated away from the trend line. We're likely to get a pullback first to the trend line, but there's a lot of bullish momentum, so we should be able to go higher by the end of the week. Keep an eye out for that. What's been driving us has been everything but Reliance. You know, Reliance is the big player when it comes to the Nifty, but you see TCS, big gainer, 4 3/4, HDFC Bank, ICICI Bank. A lot of the banks, financials were doing very, very well, with a couple exceptions. And even ITC and Hindustan Unilever, as well as Bharti Airtel, a lot of green. Titan, huge, 6% this week. So taking a look at the individual securities, Reliance is not going to be driving the Nifty to the upside, but it's not really dragging it down too much either. This is a 4-hour chart. We're just kind of stuck sideways. TCS last week had a bullish sign. I mentioned that there was a positive divergence on TCS, and sure enough, this week, look what happened. We reacted to that positive divergence by rallying quite a bit on the 4-hour chart. So you can see we made that lower low, but didn't do it with the momentum. We end up turning up. We're going to hopefully continue to push up, but there's overhead supply at 32.50 to 32.80. Those two zones right there are going to hold us down from getting a lot more gains like we did last week. So expect a bit of a bullish move, but not a lot before we could possibly turn down. Infosys on the daily chart, well, that also was somewhat bullish, but sold off a little bit at the end there. It's still got some decent momentum. We're not pulling back too deep. So there's a possibility of drifting a bit higher, maybe towards 1600 before the end of the week. And that's going to cause the markets to go up as well. On HDFC Bank, you can see we did do a pullback to a fresh low and kind of broke the trend. And now as we're moving up, we don't have as much momentum as we once had. So that's not sustainable. I see us going back and forth for the remainder of the week. So HDFC is going to be a bit choppy. Good for trading, sell the highs, buy the lows, but not so good for a swing trade. ICICI Bank also moved up, a nice move. As you can see, we had a positive divergence where prices made a new low, but the indicator was higher. It confirmed the trend change by putting in a low above 40, and we took off. But now we're in supply. We're going to get a little retreat back to the 789 area first. before we go higher. So I'm definitely bullish on ICICI Bank, but I'm looking to buy between 780, 789, targeting 851, and then maybe 869 if it continues to be very bullish. There's lots of momentum here, though. Very bullish. Satin daily chart, Satin Credit Care. This was a short opportunity. Unfortunately, you can see we went sideways. The longer you base, the more likely you are to continue the move rather than reversing. And that's exactly what happened here. You can see we ended up basing a little bit more last week and then just took off through the zone. So we're actually using that zone as kind of a support level before we push a little bit higher, I think. It's just not a great trade opportunity anymore. On the bank Nifty, or Nifty Bank, it's kind of interesting. We're hitting the top of this trend line, and there's indecision on the first candle. So on the weekly chart, you can see starting off this week, we don't really have enough momentum to break through. Although when you go down lower time frames, it does look like there is enough momentum to possibly start pushing higher. So I would be kind of shocked if we get more than a little pullback before we go higher here on the banks. And looking at the 4-hour, just really a retracement down to either 36,440 or 36,090. That 36,000 level, we should get a bounce from that area to break to new highs. Because there's nothing but bullish momentum right now. And we saw that many of the banks were the strong sector when looking at the Nifty. So moving along here, our last thing to look at is going to be a little bit of Bitcoin for the week of July 25th. And winter is not over. It is still here for crypto. We have a dead cat bounce going on right now. It's going to be very unlikely we get close to or even above 30,000 with this little bit of a bounce. There's just not enough momentum to get us there. I would not be surprised to see us end up pushing back into the zone, heading towards 11,500 before we bottom out again. You can see we've had a weekly demand zone tested. We pulled back on the daily only not even 50%, and we're just getting weakness. So there's just nothing really there to help us go higher. Anyway, that's what I got for you this week. Hopefully you enjoyed this. Let me know if you did. Stay in touch. You can always email me at, you can hit me up on Twitter. You can also hit me up as I gave you the email address earlier. It is the Wendell Effect at tradingmarketassociation.com. Until next time, everyone, trade safe, trade well, and take care.